Hi everyone, I am Nishka from Christu Jayanti College. I am going to explain you about financial market and services. Financial market and services. The world of fixed income securities can be divided into two main categories: capital market and money market. Money market includes commercial paper, treasury bills, certificate of deposit. Capital market includes stock, bonds, derivatives. Capital market are also divided into primary market and secondary market. Commercial papers. I am going to explain you about commercial papers. So commercial paper is a common form of unsecured short-term debt issued by corporation. Commercial paper is typically issued for the financing of payroll, accounts payable, inventories and meeting other short-term liabilities. Maturities on most commercial paper ranges from a few weeks to months. Commercial paper is usually issued at a discount from the face value and reflects prevailing market interest rates. Commercial paper characteristics. Commercial paper is the unsecured form of promissory note that pays a fixed rate of interest. It is typically issued by large banks and corporations to cover short-term receivables and meet short-term financial obligations such as funding for a new project. As with any other type of bond or debt instrument, the issuing entity offers the paper assuming that it will be in a position to pay both interest and principal by maturity. It is seldom used as funding vehicle for long-term obligations because other alternatives are better suited for that purpose. The commercial paper provides a convenient financing method because it allows issuers to avoid the hurdles and expense of applying for and securing continuous business loans, and the Securities and Exchange Commission SEC does not require securities that are trade in the money market to be registered. It is usually offered at a discount with maturities that can range from 1 to 270 days, although most issues mature in 1 to 6 months. Now let us see the history of commercial paper. Commercial paper was first introduced over 100 years ago when New York merchants began to sell their short-term obligations to dealers that acted as intermediaries. These dealers would purchase the notes at a discount from their par value and then pass them on to the banks or other investors. The borrower would then repay the investor an amount equal to the par value of the note. Marcus Goldman of Goldman Sachs was the first dealer in the money market to purchase commercial paper, and his company became one of the biggest commercial paper dealers in America following the Civil War. The Federal Reserve also began trading commercial paper along with treasury bills from that time until World War II to raise or lower the level of monetary reserve circulating among banks. After the war, commercial paper began to be issued by a growing number of companies, and eventually it became the premier debt instrument in the money market. Much of this growth was facilitated by the rise of consumer credit industry, as many credit card issuers would provide cardholder facilities and services to merchants using money generated from commercial paper. The card issuers would then purchase the receivables placed on the cards by customers from these merchants. A debate raged in the 1980s about whether banks were violating the Banking Act of 1933 by underwriting commercial paper, since it is not classified as a bond by SEC. Today, commercial paper stands as the chief source of short-term financing for investment-grade issuers along with commercial loans, and is still used extensively in the credit card industry. Commercial paper markets. Commercial paper has traditionally been issued and traded among institutions in denominations of $1 lakh, with notes exceeding this amount available in $1,000 increments. Financial conglomerates such as investment firms, banks, and mutual funds have historically been the chief buyers in this market, and a limited secondary market for this paper exists within the banking industry. Wealthy individual investors have also historically been able to access commercial paper offerings through a private placement. The market took a severe hit when Lehman Brothers declared bankruptcy in 2008, and new rules and restrictions on the type and amount of commercial paper that could be held inside money market mutual funds were instituted as a result. Nevertheless, these instruments are becoming increasingly available to retail investors through online outlets sponsored by financial subsidiaries. Commercial paper usually pays a higher rate of interest than guaranteed instruments, and the rates tend to rise along with national economic growth. Some financial institutions even allow their customers to write checks and make transfers online with commercial paper fund accounts in the same manner as a cash or money market account. However, investors need to be aware that these notes are not FDIC insured. They are backed solely by the financial strength of the issuer in the same manner as any other type of corporate bond or debenture. Standard and Poor and Moody both rate commercial paper on a regular basis using the same rating system as for corporate bonds, with AAA and AAA being their highest respective ratings. As with any other type of debt investment, commercial paper offerings with lower ratings pay correspondingly higher rates of interest. But there is no junk market available, as commercial paper can only be offered by investment grade companies. Now let's see how trading in commercial paper works. It is possible for small retail investors to purchase commercial paper, although there are several restrictions that make it more difficult. Most commercial paper is sold and resold to institutional investors such as large financial institutions, hedge funds, and multinational corporations. A retail investor would need access to very large amount of capital to buy and own commercial paper. Otherwise, indirect investment is possible through mutual funds, exchange trade funds, or a money market account administered and held at a depository institution. Factors such as regulatory cost, the scale of investable capital, and physical access to the capital market can make it very difficult for an individual or retail investors to buy and own commercial paper. For example, commercial paper is typically sold in around lots totaling $1 lakh. This threshold in itself makes buying commercial paper generally exclusive to institutional investors and wealthy individuals. Further, broker dealers issuing commercial paper on behalf of client have pre-existing relationship with institutional buyers that make the market efficient through large purchase of primary offerings. They would not be likely to look to individual investor as a source of capital to fund the transaction. Commercial paper rates and pricing. The Federal Reserve Board posts the current rates being paid by commercial paper on its website. The FRB also publishes the rates of AA rated financial and non-financial commercial paper in its H15 statistical release daily weekdays Monday through Friday at financial 4:15 p.m. The data used for this publication are taken from the depository trust and clearing corporations, and the rates are calculated based on the estimated relationship between the coupon rates of new issues and their maturities. Additional information on rates and trading volumes is available each day for the previous day activity. Figures for such each outstanding commercial paper issue are also available at the close of business every Wednesday and on the last business day of every month. So I conclude commercial paper, as commercial paper is becoming increasingly available to retail investors from many outlets. Those who seek higher yields will likely find these instruments appealing due to their superior returns with modest risk. Thank you.